Good morning, everyone, and welcome to our pre-market hot stocks show, where we are going to the biggest names that I have on the watch list and making an update on some of the names that we traded on the past and giving a follow-up where we stand, can we go from here. We had lots of big movers one way and the other on the both ways, on the both directions, and it's trying to make an update and follow through for some of that action. So let's move into those charts. One of the names that I receive lots of questions and to always give my analysis on this stock is AMD. Everyone knows that I love the AMD. We have been playing AMD on this range, and I said that I was looking for a move above $60 and before the end of the year, and we gone all the way into $94.28. This week, last week also, we had a beautiful break above 88. It gave a $6 scalp here for upside. Breaks below. Once it breaks below, you and with the rest of the market, you look for a short-term pullback. It was a big pullback below 88 all the way to 76. And right now, where we stand, yes, the bulls have the chance, and we saw this week mid-long-term traders buying the dip, but shorts were stronger on the short term and keeping price below the 8 and 21 the moving average. So where we stand right now on the short term, while we are below, and that's the basics on the risk management that I use, while we are below the 8 and 21 the moving average on the short term, we are bearish. But while we are above the 50-day moving average, on the mid-long term, we are still bullish. So yesterday bears make their stand and didn't let price going above the 8 and 21 day moving average. So on the short term, bears are still strong enough to keep price below the 8 and 21. So longs, in my opinion, will only trigger above 83.5. Why? That's the line that separates bulls from bears. Above that, shorts will be forced to cover, and that will fuel a big move up all the way into $87, $88 or even $90. Can that happen? Yes, but we need to see it. What we know that yesterday bears were able to get stronger and push price below the 8 and 21 day moving average. So what support do we have? If price goes below yesterday lows, below 78, right now on the pre-market, let's see where we stand. We are at $80. If price from $80 goes below 78.38 yesterday lows, we have 76. That's my first support. And below that, we have 73.9. That's the low before entering the gap. Also, the 50-day moving average is right around the corner. So if price breaks below 78.3, we look for 76 and 73.9. And from there, we will evaluate. If price goes above 83.5, you go long because shorts will be forced to start covering the positions, and we can fuel a big move up. So right now, it's where we stand. Beyond Meat, a very beautiful move this week. For those that are following me for some time know that Beyond Meat was one of those names that I highlighted several times, and it was really a beautiful move. After filling the gap, one of the things that I said, it's at below 128.7 we have a gap to fill, and looking for 120 support as possible target, and we hit that target and immediately bounce. So one of the things that I told is that you can play the range, okay? You can play buy $120 and sell 139, and that game plan worked very well. And another thing that I told you is once we break 139, you look for $150 target. What we hit, 149.57. So basically I missed by just a few cents. Right now it's where we stand. So now what? Now you should probably after 3 day move, and especially with the market so weak, you trim profits, you close the position and move into the next one. So right now, bull case scenario only above $150 for a bigger squeeze. Not sure if the stock will have strength enough to break higher above $150, but anything can happen. So in my opinion, it's trimming profits, raising the stops on the rest. Eventually our stops will get hit, but the easy part of the trade already gone. So congratulations on that one. Okay, Draftking, another one that I brought to you this week, and it was a beautiful trade. I said that while we are above $34, that was my line in the sand. Above 34, you should be looking for a resume back into the 40s. And yesterday we hit $44. So we started the week around 35, 36, and we had a beautiful move all the way into $44. Now what? Now it's the same thing. Okay, especially with the market so weak, as we saw, having this kind of relative strength, day 1 to 3. On day 3, you trim profits, so it was wiseless yesterday to close the position, or at least the most part of the position be closed, raise the stops on the rest. Eventually your stops will get hit, but you had a beautiful run up, so congratulations also on this trade. Gold, another name that I talked this week. Yesterday it was rejected right at the resistance line. Bull case scenario needs above 185, bear case needs below 179. It's coiling, the range is getting tight, so we will have probably a move any week from any day from now. So waiting. Okay, one of the things I'm seeing a possible bullish divergence with price coiling, but the oscillator going up. We need to see. Give it some more days, and eventually we can have a trade there. For now, it's a no trade. JP Morgan also no real buying here on financials. I keep seeing also on Citigroup. Let's push Citigroup. I keep seeing bullish options activity on those financials, but really no follow through. So Citigroup is exactly the same price, keeping the range very, very tight. We have $49 as support. We have 53.54 as the wall. So longs only above 54, shorts below 49. You can play the range. Eventually this range will break one way or the other, and we will be looking for a move out of this range anytime in the next couple of weeks. JP Morgan is exactly the same, holding above the 50-day moving average. So it's very difficult to have a bear case scenario while we are above 98.5. That's the 50-day. Below that we have 96.5, my line in the sand. Breaks below, really bad thing can happen with a move below $90. That's a possible scenario, but once again we need to see it. So right now not touching in financials, only waiting to see what is going to happen next. Silver, exactly the same thing. Yesterday bulls had the chance to push price up. It was rejected, but still holding my support line. Bear case needs below 24 for a move into 22s. Bulls needs above 26 to resume back and trying to go into 28. So right now it's also a waiting game to see where this is going next. Yesterday SQQ gave a nice momentum trade. I highlighted bullish options activity on weekly calls, 23.5 strike for this week, expired today, and it was a beautiful move here with those calls going for $3, and the high of the day 26.5. The calls were 23.5. I saw those calls going at 60 70 cents, and they gone for more than $3. So it was a beautiful one. I didn't play SQQ, I played VXX, and that also helped me to generate some nice cash flow. So one of the things that I always keep saying is during this, once we break below the 8 and 21 day moving average, you start looking, and from last week, if you remember, Wednesday, I said on the video, okay, on the YouTube video, and I said tech bulls are getting tired, and we should see a possible pullback. On Thursday, 1 week ago, I said before the market opened, risk management, look for volatility names, VXX, UVXY, SQQ. There are lots of names for volatility popping, and because I was expecting volatility to start popping, and we are seeing that. So that has been playing very well, and it's not an investment, it's just to generate cash flow on intraday. If you see market fading, volatility starts popping up, and you can generate and scalp that kind of volatility popping up. But on the long term, okay, volatility usually fades. That's something. But on the short term, you can have very profitable trades there. Tesla. Also, another name that I received some questions and some requests for analysis. Yesterday, I said that bull case scenario needs above $400. They hit 398.99, below 399, and not able to break above the $400. So bull case scenario needs above $400. They keeping price below the 8 and 21 day moving average. So once price below the 8 and 21 day moving average, the rules say that we are bearish on the short term, but they held the 50-day moving average. So we are basically in the middle of no man land. We wait, okay? So bear case needs below $330. It can fall apart and fill the gaps that we have lower going into 273. That's a possible scenario, but we need to break below $330. Bulls needs above $400. You can play the range or wait. I prefer to wait. That's my one way of trading, and but it's each trader decision and risk management. Okay, Uber. I also highlighted this week with bullish options activity on the name. It was a beautiful trade with day one here on Tuesday, right to start the week with a big expansion candle, big candle up. Pushing price above the 8 and 21. It was able to have 1 to 3 days move. It was a beautiful move from $32 all the way yesterday, 36.7. On this kind of moves, more than 10% stock move, you trim profits. So yesterday it was day 3. In my opinion, it was the wise thing to do to lock those profits. And congratulations if you did it. Another one that had some very nice momentum this week. It was Workhorse. I had, for those that are with me for some time, know that Workhorse was one of those names that I was liking for a long move, a move up. I had $25 target here, and when we were here, so we were at $16-17, and I was having a $25 target, and we hit that near that 24.49, and it was a big move up. So look that we came all the way from $16-17 all the way into $24 plus. So that's more than $7 move here on the stock. So that's a big, and I keep saying that, and I will repeat that again, big move. You have almost 50% stock move here on the stock. So what do? You trim the hell out of those profits, okay? And go back into the cash, especially after 1 to 3 days. On day 3, you trim and close everything, or close most of the position on day 3. And what we saw that on day 4, the stock pulled back. Can it go higher? Yes, anything can happen. But from a risk management perspective, when you have this kind of expansion, you lock the hell out of the profits, especially on day 3. You close most of the position. If you want to try day 4, 5, you can hold some of the position, but way less, and keep raising the stops. Eventually, your stops will get hit, but that's a way to manage the risk. So where we stand right now, we are overall the picture is bearish on the short term. Yesterday the shorts were able to get some power and push price below the 8 and 21. So on the short term, while we are below the 8 and 21, you go tactical, you look for ways to generate cash flow, and be cautious because volatility popping up, and that's why last week I gave you all volatility names to trade, and they worked very very well, and I hope that you had some fun playing those volatility calls. I played myself yesterday, and they worked very very well. So now what? We cannot have a real bear case scenario while we are above. For example, and if we go into those futures, SP 500 holding the 50-day moving average, Nasdaq holding the 50-day moving average, Dow Jones holding the 50-day moving average. So yes, on the short term we are bearish, but while we are above the 50-day moving average on most of the names, we cannot have a big bear case scenario. So now what we want to see, after yesterday move, I want to see if bears are able to get enough power to break below the 50-day moving average. If they break below the 50-day moving average on SP 500, Nasdaq and Dow Jones, then we can start the big correction all the way into 200-day moving average, and from there we will reevaluate. The March 2020 correction only started when we saw every single name, SP 500, Nasdaq and Dow Jones, every single one breaking below the 50-day moving average. You see here, day one, it started the correction, and we came all the way down with a big correction with Dow Jones, for example, making 38% correction from top to bottom, and Nasdaq exactly the same thing. So they push and price break below the 50-day moving average. SP 500 is exactly the same thing. They push price and keeping price below the 50-day moving average. So that was your day one. And keeping price below the 50-day moving average. Can that happen? Yes, of course it can. It happened in the past. Can happen again. But we need to see it. And be open-minded for any scenario. If then else. If price goes above, for example, on SP 500, if price goes above 34.25, it's this week highs. Shorts will be able to will be forced to cover the positions, and it will fuel a big short covering rally, and we can scalp some longs. But if we break below this week lows 32.95, we can fall apart and going all the way into 200-day moving average. On SP 500 cash, on SPY, we have lots of gaps to fill down, to fill lower. So yes, the path can be lower, but we need to break below these week lows. If we stay there, we keep playing the range. There is big fight between, on the short term, bears shorting the hell out of the market, and on the mid long term traders are still buying the dip. So wait is my suggestion. Wait for the price to break one way or the other. Okay. So thank you all for watching. It has been great to doing this morning podcast show. Thank you all for watching. Don't forget to leave your comments below. Give me a like, please, and leave your comments below. I would like to hear from you. And stay safe. Manage your risk wisely. I'm very happy with the way we have been managing the risk with volatility calls and playing tactical intraday cash flow. It's what I'm looking for, and very proud with that risk management. So stay safe. Wish you all a great day, great weekend, and the most important thing of all, be happy trading. Thanks everyone. Bye bye. See you.